I thought I'd give you an update for the end of the financial year as it stands at the moment. Hi, my name is Richard Parsons and welcome to 2020 Financial Planning. As I said, I'd give you an update on where things stand at the end of the current financial year. Most investors would have enjoyed a very good 2012-2013, which will shortly show up on end-of-year financial statements. This has been driven by the increase in stock markets, particularly the Australian stock market over the year. The top 20 stocks on the Australian Stock Exchange actually delivered returns of around about 25% by the year, which has been driven by the banks. Out of the top 20 stocks, the bottom 5 performers are all mining stocks, including BHP and Rio Tinto. This doesn't mean that the mining sector is going to completely collapse. However, it does mean we're not going to see the price rises that we've seen previously. From an ordinary Australian's viewpoint, though, the mining boom has had little in terms of day-to-day impact on their jobs. 3/4 of Australia's population live in New South Wales, Victoria and Queensland. Out of their population, only about 1% work directly in the mining industry or allied industries as such. Where we've seen benefits as consumers has been from the high level of the Australian dollar, which has meant that anything imported into this country has been exceedingly cheap over the last 2 to 3 years. Those prices may rise over time. Sydney and New South Wales in particular are going to get some upswing in terms of new infrastructure projects, which can only assist with their transport system and then terms of economic growth. Also, with low mortgage rates, Sydney householders are also experiencing probably an uplift in terms of their disposable income. In terms of economic growth, Australia has really benefited from growth of New South Wales and in particular Sydney. You can think of it like dropping a stone into a pond where there's a ripple effect that comes about out of that. If Sydney is turning its nose up in terms of economic growth, you will see that that will have an impact upon the rest of Australia in due course, as most of the corporate decisions are taken out of Sydney as it stands. What could also be seen as a potential circuit breaker is the federal election, whether it's held on September 14th or at a later date as is currently speculated. The Business Council of Australia and newspapers have been reporting recently that businesses are sitting on their hands and are not prepared to commit to spending until they see the outcome of the election. We could therefore see likely a new government being formed and some perhaps upswing in business confidence, which can only be good for economic growth as it stands. So where to from here? Well, we're likely to see continuing low mortgage rates and also interest rates for the foreseeable future. There's been recent speculation that the Reserve Bank may cut interest rates further. We'll just have to wait and see as that stands. Also, the Australian dollar is continuing to trade at lower levels. It's currently trading in the low 90 US cent range. It may trade lower from here. This is more a reflection of the strength of the US dollar or monies internationally returning back to the US dollar from other currencies. Historically, the Australian dollar has only traded anywhere from 75 to 85 US cents. World economic growth will continue to recover. US, China and likely Japan will add to this. Detractions will obviously be continuing low or negligible economic growth in Europe, particularly Southern European growth. What does this mean for Australia? Well, Australia, we continue to be the lucky country. We're rotating now back out of the mining industry, back to a more normalised type of economy. Low interest rates will help. The potential for a new government post September 14th or whatever date the election may also add to business confidence and also consumer confidence. This can only be positives for the country and in due course economic growth and in business profits, which should lead to higher prices for businesses over time. Anyway, that's all I have for you now. Please feel free to email me back or hit us up on our YouTube channel or our website for any further information. Bye for now.